You're listening to Win-Win, an entrepreneurial community with your host, Ben Wolf.
And welcome to the Win-Win podcast. This is Ben Wolf, as always, your host. I want to introduce our guest today, who is going to speak about the dangers of not building a real relationship with your bank. Before we get into that, I want to ask everybody to pause this recording, video, audio podcast, however it is that you're listening to this, and leave a review, comment, like, share, because that is what makes it more accessible to more people. As well, I would mention to people that if anybody out there is listening, and this is relevant for all of you too, who are in the area of fractional executive leadership, we have a great community, and the topic we're talking about is relevant to that, but it's useful information, not just to CFOs, but also to any leadership team members, because it has to do with the health of the business. And if anybody out there is in this fractional executive world, check out, we have a great professional association and community for fractional executives, helping them connect with, learn from each other, and many other great things related to that. So check out fractionalleadership.io for any of you all in that space. And with that, I want to get into introducing our guest today, who is the Vice President and Senior Relationship Manager at American Business Bank. This is a bank for private, closely held, medium-sized businesses headquartered in Southern California. Clients typically have a revenue range of 10 to 200 million. You can learn more about our guest and his organization at americanbb.bank. That's americanbb.bank. And with that, I give you Trey Weatherill. Welcome, Trey.
Thank you, Ben. Thanks for having me.
My pleasure, my absolute pleasure. So I guess it would be most helpful if we got started today, if you could give us like a quick 2-minute background, quick 2-minute history that kind of give us a little context. Maybe some of that stuff you told me was useful also before we started recording, but quick 2-minute history on helping us get some context for what we're talking about right now.
My background is one in which is pretty common in the banking industry, which is nobody really starts out wanting to be in banking. We kind of end up in banking, somewhere along the lines. Sometimes it's we know somebody, which was my case. My father-in-law spent 34 years in the banking industry, and so that's kind of how I migrated into it. But it's been a really good career. I've been at it for 33 years in May. Really, my focus has always been just, serving people, serving businesses. And there's a lot of joy that comes with that. And if I keep that focus, relationships develop, and a lot of fun can happen in what is probably viewed as a pretty boring industry by most people from the outside. So, in any case, like you said, my clients are typically middle market, clients that are between probably 15 or 20 million up to a couple hundred million, but the sweet spot's probably that 20 to probably 70 million, because there's a period in which businesses, get to things are keeping them up at night. Their business are growing. They're running into issues they didn't when they were smaller, and they need advisors. And bankers are just one of typically probably 4 or 5 different advisors that are probably needed to help support a business. Typically, that's your banker, your CPA, your attorney, and your insurance agent. If you're a contractor, you probably have a bonding agent that's in there as well if you're doing bonded work. But most businesses that are smaller, they might not have these needs immediately, but eventually, if they grow into a certain point, they need help. And there's a lot of support that you can give them if they have that desire.
Right. Awesome. I guess when we talk about this topic, which I really, haven't delved into a lot, I haven't been in the finance area of running finance of businesses. I'm in COO and running other aspects of business, not with a special focus on finance. So I'm eager to have this conversation. And I guess the way I think of banking, or in the 2 small businesses I have, the way I think of banking is, gosh, whoever has the easiest app and the easiest to work with, mostly transactional, just,
Mhm.
that's really just it. As long as that whatever's easiest and most practical or least expensive
Mhm.
for those kinds of things, that's all I'm really thinking about. I imagine that as businesses grow up, they bring that attitude with them, even beyond perhaps its usefulness. So I guess if you could just like educate me, um, then there's no relationship with the bank or with the assigned commercial banker that might be assigned to you. So, and you're with the big banks, Bank of America or Chase or whatever, Citibank. Um, what's the problem with that approach? What are the risks? What do you think
Yeah.
about that?
Yeah, I don't know that there's necessarily problems there. I think there's a time and place for every type of bank, right? And we all have the toys, the online banking, the apps, remote deposit capture, your phones where you can just deposit that way, and all those sorts of things. Everybody has those things. 80% of everything we do is the same. Just like 80% of everything that most businesses do is the same. It's kind of that other 20% that kind of separates what your need might be. And businesses in that timeline of growth and maturity will start running into issues. They'll start running into employment liability. They'll start running into working capital issues, expansion issues, and they really need that group of unofficial advisors that will support that growth. They want a relationship with somebody that maybe has an expertise in their industry. They may want to have somebody that has other clients that are experiencing the same things that they're experiencing, so that they can get market or industry intel that kind of matches what they're doing. And that's really going to come down to the individual banker. The bank I work at is very unique in that we have a group of bankers that are built like this. We've built a culture like that. But if you're dealing with a big bank, you need to probably find that person, who that is. The best way to probably go about doing that is to use your resources. You want that person that's going to bring that relational component to you, so that you have the information that helps you make the best choices. And that's not just going to be for your banker. It's going to be for your attorney. It's going to be for your CPA. It's going to be for your insurance guy, or your bonding agent within the insurance realm. You've got your liability, and then you have your workers' comp, and then if you're a contractor, you're going to have some bonding agents if you do bonded work. You need these people. And so trade groups that you belong to, you need to spend some time talking to these people. Who are you using? I think it's important that business owners realize that this is a constant effort on their parts to try to match who their advisors are with where they're at. And they'll know, they know, their gut's telling them it's at a certain point. And trade industries, I find that a lot of businesses that compete with each other, they have relationships with each other, which sometimes astounds me because they're competitive with each other. But they do have relationships with each other. If they have a CPA, they may ask their CPA. If they have an insurance guy, they may ask their insurance guy. Who are your clients using? Who should I be talking to? And then you take your time, just like you do in any relationship, and you build a relationship. You don't pull the trigger immediately, but you try to find somebody that matches with you. And a lot of times that's personality driven. If I take a look at cross section of most of my clients have a very similar personality to me. Maybe not identical, but one in which that we kind of get each other. That's helpful in that process as well, because comfort, besides just the industry knowledge and the work ethic that comes along with it, all of that sort of stuff, you kind of got to get each other.
Well, what will, if somebody has a relationship with a banker, a good relationship with a matching personality and maybe some industry knowledge, I guess what differences will they experience? Like, what's the difference for that person versus somebody who has no relationship? with
It
a
really
bank?
just depends, I mean, you used the word transactional earlier, the banking industry has not done itself much of a service over time. We're famous for giving you an umbrella on a sunny day and then pulling it back from you on a rainy day, right? It's kind of like the old joke
Yeah.
about the industry. And so, your relationship that you have with a bank should match where you're at with your business. You need support, and like I said, just a couple seconds ago, that should be something that every owner is not reacting to, but is proactive to throughout their process.
And
And
does that going to
if
mean
you
that they're
don't,
going to
then you're
have
going to be reactive, right? And then you're
right?
going to sometimes make bad choices. It's just like any aspect of your business. I mean, EOS teaches these skills all the time, right? About what are your goals, what are your obstacles, and what are your rocks, right? I mean, that's your mantra.
Right.
And banking is part of that. Accounting is part of that. Legal is part of that. Employment liability is part of that. You want people
Right.
that understand all of those components and aren't just pitching you product. Anybody
Right.
can anybody can do it. That's easy.
Right. And so I guess if you're building a relationship with somebody, they're more likely to have an umbrella on the rainy day too, not just on the sunny day.
Yeah. I mean, you certainly need to understand the culture of that bank and what kind of authority they have too. What's unique about the bank I work for is all of us have credit authority. I can't, hamstring the bank more than, $500,000. But neither can the CEO or the chief credit officer of our bank. But collectively, I can get, 4 other officers to agree with what I want to do, and I can lend the legal lending limit of the bank, which is about $75 million.
Mm-hmm.
So it's a unique culture in that way, but most banks are not set up that way. So normally you have the origination side, which is the person that's the customer facing, and then you have this wall in between them and credit. So you need somebody that, if you're not with a bank that has the type of structure that we have at this bank, you need somebody that knows how to navigate that and understands the rules so that they know where they can sit. And they're not just telling you what you want to hear and trying to meet some sort of loan goal that they have for themselves. Their interest should be in making sure that you understand that you're hearing what you need to hear and not what you want to hear.
Right.
Yeah.
Right. Now, when people are, I guess, when you think of your best clients, or when you were on the business side, when you have a banker that you had a relationship with, I guess, like, for those relationships, I mean, you don't need to overdo it, but like, what's kind of the best ideal cadence, I guess, for how often you're seeing each other, what you're sharing with them, like what's involved in that nurturing, I guess, over time of that, or
I
upkeep?
would say, I've got clients that are that meet with me once or twice a year. But then I've got clients that want to meet with me on a quarterly basis. And I actually feel like I have more depth of relationship with them, and I can serve them on the level that they need.
Mm-hmm.
If I am meeting with them quarterly, I'm obtaining, quarterly financial information from them, so that I know the health of their company. It really just depends on where you're at, again, in that continuum. If you're a small business and you do not have a lot of borrowing needs and it's all depository related, there's probably no need to meet with a banker on a regular basis. But if you have borrowing needs, maybe you need a working capital line, occasionally you're buying equipment, maybe you have an international component and you need to be able to do letters of credit, or currency exchange and those sorts of things. You want a bank that has those services, and you probably ought to be meeting with your bank on a regular basis. When I say regular basis, that means at least once a year, but preferably probably two times a year, just, so that you can plan. A lot of times, my clients are very appreciative of the fact that I meet with them on a quarterly basis, because they can pick up the phone and they can call me and they can say, Trey, I need 5 new trucks. And I'm like, okay, send me an invoice. I'm already underwriting it up here because I'm meeting with them. You know what I'm saying? I
Right.
actually do the underwriting,
Right.
because I have credit authority. But people that don't have credit authority can do that as well. They know what the runway is with their client. If they're a good banker, they should know what their runway is, and they should be able to answer that question with relative certainty without just telling them what they want to hear at that moment.
Right.
And if a banker is active in that relationship, they should be able to make that call, even if they don't have authority.
Right. That's helpful. I guess what range would you say, I guess, is on the lower end for most bankers that you could have a relationship with, right? If someone's going to be worth their while, or I don't know, if it's going to be worth their while, I don't know, let's say for people to feel like they're like the banker is going to be interested or willing to be having a relationship with them, right? So I guess what's the lower end of that spectrum, generally speaking, from what you see?
You mean as far as frequency meeting frequency goes, or are you
No,
just
I mean
talking
in
about
terms of
as
like
the quality,
revenue,
on a
like
quality
revenue. I don't know, how big does the business need to be
Okay, all right.
for that to be,
Yeah,
I guess, for them to have access to a
Yeah.
relationship with a banker?
It's going to depend on the industry itself. Some service industries aren't that big. You can have a legal firm that only does, 4 or 5 million in annual revenues, and that can be a pretty substantial firm. They can have a lot of employees, and they may have some needs that you can help them with. A lot of attorneys have, trust accounts that they need to have. They help support, their relationships with their clients, so there's some expertise and that can be brought there. But I would say on average, so let's just look at my clients segment. Most of my clients are either in the manufacturing, wholesale distribution, or they're contractors. And I would have to say that most of your big banks, if you're not over 10 million in deposits and you want to borrow 15 million, from them, either on a term basis or a line basis or combined, you're probably not going to get a lot of attention in most cases, but there's exceptions to that rule. So the way you combat that is you speak to other people. You use your curiosities. Who are you using? Who should I be talking to? And you find these people, and then again, you take your time getting to know them, getting to know their bank, talking to others. I'm a big fan of this whole birds of a feather thing. They always flock together, and I do that on my client acquisition side. They should be doing that on their the customer should be doing that on their advisor acquisition side, even their vendors for that matter. They should be having conversations with other people that are using that person so that they know. It's harder in the bigger bank environment to do that. It's probably a lot easier to do that in the small to medium sized banks. It's just like anything else relational. You've got to take the time to build it, and you need to get to know people. So
Right. So you're asking competitors, asking to people in peer groups, asking people that have got, I guess, similar size and scale businesses or even bigger, and just learn from their, just see what they say, see who they're talking to, have okay, so that's a much more informal process.
Well, and there's little ways you can figure it out too. I mean, you get a referral from somebody, and you go to LinkedIn. Every banker's on LinkedIn these days, and you look at their history. And if they don't have a history of staying in one place for a while, and it seems that they jump from bank to bank every couple of years, you're in for a ride if you hook your wagon to the guy, right?
Right. You go and join, bring everything over to that bank, and then you're stuck and have to find a new banker at that bank a year or two later.
Yeah, and changing banks is a pain, especially the bigger your institution is. So obviously, we at American Business Bank do our best to try to mitigate that pain as we're going through the migration for a customer. But the reality is that it's viewed, kind of like changing your CPA, changing your bank. They're just pains. Yeah. So you just don't do it. People have a higher pain
infrequently
threshold
as possible.
Yeah.
Well, what happens, I guess, what happens if you do find yourself? What should people do if they do find themselves in that situation? Even if they are at a great bank, maybe their banker was there for 20 years, but then they retire a year later, or, or leave for whatever reason. It probably can still happen. So, what should people do?
One of the things that we do to combat that at American Business Bank, because it happens, right? Somebody retires, somebody, gets offered a ton of money, they go somewhere else, you know what I'm saying? That sort of deal. It happens. We have what we call a 2x2 mentality, where even though I'm the primary calling officer on a client, we typically have another banker that's also involved in that calling process. There's two reasons for that. Number one, credit committee's happening on day one, right? And number two,
you want additional credit to be authorized at some point, so you don't want your colleagues to have zero context about some of your clients.
Yeah, well, it's on the credit side, and it's also just on the support side. If I'm on vacation, I want another banker to be familiar with this, because I don't want to be, tethered to my, my technology nonstop
when you're on vacation,
when my family's in Europe or wherever, you know what I'm saying? I want to make sure that they are supported well, and that person knows the relationship, and it's not just names. It's they have an intimate knowledge of the credit as well. The services that are part of that. So my suggestion to businesses that would find themselves or have in the past found themselves in that dilemma where all of a sudden they've lost their banker, to make sure that there's more than one banker that knows who they are. So that person's boss, and banks are generally all set up the same way. You have a calling officer, then typically you have either a branch manager or a regional manager that supports that relationship. Those two people should at least be involved in that. And if you're of significant size, you probably should be demanding a meeting at some point along the lines with other executive officers of that bank, CEO or you're probably not going to get the CEO of Wells Fargo or Jamie Dimon's not going to show up to your office for a meeting from Chase, but But if you're dealing with a
$10 million business, I need
a smaller, medium-sized bank, you probably ought to know who the players are. And if you get an opportunity to play in their bank golf tournament or one of their other events, you should probably try to get in front of that person so they know who you are, because you're going to need favors at times, and you're going to need them to know your story. That's the most important thing. There's a story behind every business, and with every business comes an owner. And what banks really want to know is they want to know that person is going to pay them back. That's really what it comes down to. It can be bullets on paper, but the banker has to have that gut feel. And that's what makes it hard when you have a wall between origination and credit. Banks today, for the most part, throw salespeople out there. They've got a wall, and then they've got the credit side. And that's what's made it difficult for a lot of businesses. But if you can find a bank where that person has depth of relationship with the credit side of the bank, or is doing it themselves, like I do, that is a relationship you need to develop, and you need to develop a relationship with people that are above that person, so that you can shore up that possibility of a retirement.
Right. No, that's great. That's great advice. I guess when it comes to, so that kind of stuff is like the big stuff, right? That's going to be better at a bank if you nurture the relationship. You as a business owner are nurturing the relationship and working with the banker to nurture the relationship, and maybe some of their superiors. Then some of these bigger issues or bigger challenges, you're gonna be better off than you would at some giant corporate entity where you're barely noticed as a cog. But do you ever find that so that's like on the big stuff, but do you ever find that there's a trade-off on the day-to-day of any less convenience, or on the local or regional or state banks? Is there ever a trade-off that people have to make or do some kind of cost-benefit analysis on some of the day-to-day convenience side? Or is that just a stereotype on my part that I think there might be a trade-off? But Is there sometimes a trade-off, and how should people think about that?
Well, I think the big trade-off, I think that most businesses should be aware of is that the less of a relationship you have with the bank, the more chance there is for overreaction, which will be negative to you. Okay, it'll negatively impact you. The more of a relationship you have, the less overreaction there'll be, because the trust.
Meaning, if you miss a
developed
payment
over
or
time.
something.
Miss a payment, or you've had a bad quarter, or maybe a bad year. You know what I'm saying? You've tripped covenants on your borrowing, stuff like that. The more of a relationship you have, the more the bank and the banker understand that they're still okay, that they trust your management. There's 3 rules in banking, and they are management, management, management. And if you can display that, even though you're going through this season, and it's not an if, it's a when. I've got very successful, $50 million businesses that have issues. The owner all of a sudden decides to build the Taj Mahal for his wife. He's getting up in age. He wants to maybe go out and travel and see the world a little more. He might not have spent enough time building up his management to manage that thing. And all of a sudden there's $1.5 million loss in the year. And how do you mitigate that? Most banks are going to overreact if they don't have a relationship with their banker and with credit. And if you're not meeting with them quarterly or semi-annually so that they can get a heads up coming, they're going to completely overreact in those situations. So
you can't get ahead of it.
Yeah, exactly.
About a relationship.
Yeah. It's all relationship driven. And if you don't have a relationship with your bank that matches what your expectations are, you should start investigating where you can find one.
Right. It was very interesting when I read up on you, and saw that your bank has, reading here, 3.8 billion in assets, only 2,000 clients, 200 employees, about 1/4 of which, 49 approximately, bankers. For 3.8 billion in assets and only 2,000 clients. I don't know. That was surprising to me. Just like, wow. I mean, just like so few clients. I mean, it's a good sized bank, obviously, but like so few clients. And I guess it just speaks to that relationship priority. But I guess last question. Yeah, go ahead.
Well, we're a little different. We're different in that we not everybody gets let in. You know what I'm saying? And it doesn't mean that we're picky. It's just that we know what is a match with us. I always go back to the example of somebody that, let's say I'm looking at bringing in 2 separate clients to the bank, and one of them is bullets, absolutely bullets on paper, financially. Okay. I can underwrite the deal. The FDIC is not going to give me a heartburn on my credit memo. It's just going to be fine. But I picked up the phone because there was somebody in their, accounts payable, aging, that I know. And I find out this person is a grinder and is always looking for discounts on what they're paying, what they're supposed to be paying. They drag their payables out, past 60 on a regular basis. And they don't have a very good reputation at that vendor. And then I pick up another credit, and the guy is, maybe has some credit issues. Maybe it's not as easy to underwrite that deal. When I say credit issues, meaning maybe they had a period, in recent past where they did go through one of those difficulties, but we've been able to shore it up. We understand they're strong managers. They've been through, several, economic cycles. We know that, they know how to manage it. We can look at past and present performance, and we're able to underwrite it. And I pick up the phone and I talk to that accounts payable that I happen to know. And they say, yeah, I do business with these guys, all day long, because, come hell or high water, they're going to pay you back. Well, that's huge. Absolutely huge.
Right.
And so those types of things allow you not to overreact.
Right.
And that's what makes us unique, is not only do we have the credit authority that you spoke about, not only, do we provide a advisory type, service to our clients that most banks don't do. but we don't overreact because we have depth of relationship with our clients, which
Right.
allows us to be able not to feel like we have to do every deal. We want to do the deal that matches with us. And so that's what makes us somewhat unique.
Right. And your example just now speaks to something you said earlier about not just that the business owners need to be speaking with their friends and colleagues and competitors about who they do for their banking, but about how you're speaking with the stakeholders and the vendors of the people who want to be your clients to make the same kind of adjustment. And I guess I think that that also goes into what you're probably going to answer on the last question, which is that look, I mean, American Business Bank is in Southern California. And most people in America are not. So no offense to Southern California, but most people in America do not live in Southern California. So for those that are there, wonderful. You reach out to Trey. For those who are looking for a banker somewhere else, I assume you're going to say, talk to your friends, talk to your colleagues, talk to your competitors, right? And then find out who's going to be the best relationship where you are.
Yeah, I mean, I'm not the banker for everybody. I know that. I talked about personality earlier. I do have some regional restrictions, as you just indicated. A lot of my clients are headquartered here, but they have operations elsewhere as well. So it's not like we're not doing business in other parts of the country. I've got clients that benefited tremendously by the big upswing in real estate and sold property and did 1031 exchanges, into other real estate and other properties that I've had to finance over the last few years because of that growth in value. So we operate outside of the state, but most of our clients are independently owned, family-owned businesses headquartered here in Southern California that may also have operations elsewhere. But we don't have to operate outside of the state to do a tremendous amount of business because we sit in depends on who you talk to, the 5th or 6th largest GNP in the world.
Yeah.
So
yeah,
there's a lot to be had here.
We
got 40 million people in this state.
Plenty big enough market for
exactly.
for you.
Exactly. But you're correct in that I think that business owners need to choose a banker that's best for them. The bank's going to do that, so why shouldn't they do that for themselves?
Right.
But to take the time and to get to know them and to they've got their spheres of influence, all over their regions and where they're at. They should be having those conversations. And if some of your viewers want to pick my brain, they're free to reach out to me and I'll give them some direction and some advice. And all of you guys at EOS are going to be doing the same thing as you're going through your process with them as well. Yeah. Banking's just one component of it. But there's definitely a difference between an advisor and just a banker.
Right. Well, it's a good way to conclude. I really appreciate it. I appreciate the education on this topic and everything you've shared. Again, you can learn about Trey Weatherill through AmericanBB.bank. But just really appreciate the time you made.
Yes, thanks for having me. I appreciate it.
My pleasure. My pleasure. Thank you. And thank you for making it. And everybody else, we will see you on the other side. Thanks.
You're listening to Win-Win, an entrepreneurial community with your host, Ben Wolf.